Welcome to another episode of No Investment Advice. We got the NIA boys here today, Trung Phan, me, Master Flex himself, Jack Butcher, founder of Visualize Value, and Bilal Zaidi. Boys, there's only one place to start here. It's breaking news. Binance is acquiring FTX. Well, it's TBD, but that is
TBD, but the fact that
news.
they both tweeted it out is insane, right?
Especially what's been going on over the last few months, but not even just last few months, like the last week has been quite insane.
Let's put it, it's Tuesday, 1 p.m. Eastern right now. So we're done by 2 p.m. Eastern. This whole thing might be stale by then. But let's just talk about how they got into the situation they did, yeah? But before, meme of the week first.
Mate, all right, so this is I mean, look, us guys in the group chat have been sending so many bangers, right? So we got a few for you today. Jack, do you want to share a couple of the best ones?
Man. Prime.
No, this is okay.
There we go.
This is like top 5 tweets of all time. I think Dave Portnoy, the dude who spams my comments 24/7, is buying FTX? Question mark.
So for the uninitiated, one of the most common crypto scams is of CZ, who is the founder of Binance, the richest person in crypto right now. I think he's worth $20 or $30 billion.
Definitely is now.
Yeah, he is now. His exchange, Binance, it's an international exchange. It's been criticized for the fact that it doesn't have very many guardrails, and people think that it's just everything goes Wild West, which is true for the Binance exchange. They have a U.S. exchange, which some people may have used, but the international one is one that mints money. But the whole point is this. This is so funny because
are these all in the response
in Dave Portnoy's tweet, there's a bunch of crypto scams that he had just said that it's a bunch of crypto scams. So typically, when you go to a lot of big accounts, like anytime Elon tweets, for example, there's a bunch of fake Vitalik Buterin accounts and fake Vitalik is a founder or one of the key founders of Ethereum, and fake CZ Binance accounts. They're just scamming in the replies. So this Dave Portnoy tweet is just perfect. He quote tweets CZ Binance's announcement, which reads, 1 hour ago, so this is at noon Eastern on Tuesday, CZ writes, this afternoon, FTX, which is founded by another super rich crypto dude, Sam Bankman-Fried, asked for our help. There is a significant liquidity crunch. To protect users, we signed a non-binding LOI intending to fully acquire FTX.com and help cover the liquidity crunch. FTX.com is their international business, to be clear. There's also a U.S. business. We don't know what's going to go on there. But I'll add the last thing is it's all pending due diligence, which means in the next 24 hours, by the time now and this episode goes out, that due diligence may not satisfy CZ. So Bilal, let me ask you. Wait, go ahead.
I was just going to say, and maybe is another 10D chess.
Oh yeah,
we did the DD, and it's.
I think he's been on the 10D chess already.
So we will be explaining how CZ. People are accusing CZ having caused this situation, FTX, where he caused the liquidity crunch, and then now he's coming as a quote-unquote savior. But Bilal, can you pull up the stat from Eric Newcomer that you had earlier?
Wait, let me pull that up.
This is just giving people an idea of the valuation of the FTX has been at, and it may or may not be going to zero. So just an idea of what's going on here.
So I can share.
Hang on, I'm on that Zoom UI issues here.
All right.
Fuck's sake, I've done it again, haven't I?
All right, sorry. Wait, I could do it. I got this one. It should work. This one, yeah?
Yeah.
So Eric Newcomer, Sequoia invested in a $420 million round in FTX at a $25 billion valuation in October 2021. And a consortium with Paradigm invested $400 million at a $32 billion valuation in January 2022, which is only, less than a year ago. And now we're selling in a fire sale. This is a truly crazy event in startworld.com bust level event. I mean, I did see some other tweets earlier, which were basically saying if Celsius, Luna was it Bear Stearns, what's going to be the layman? And like, this is, I mean, I guess the question is if FTX went to zero, basically, and they weren't saved, that would be the layman, right? But if they're like bought out by Binance, it's not as bad for the space. What do you reckon?
Well, yeah, Layman was kind of taken apart and bought by other bigger financial institutions.
Oh, okay. So then
this
I
one
guess
is quite significant, obviously, because these were the two biggest players. Coinbase these three were kind of considered the three main players, right? But I can give let's walk through like what's going on here and why people think that CZ may have triggered the liquidity crunch here.
Should we just finish that last meme? Because I think Jack had
throw up the next
one
meme.
more to share, and then we'll get to that.
This will tee it up because there's something to break down in here. Incredible. Incredible. For the listeners, the meme here is taken from the clip of Elon walking into Twitter earlier last week where he said, "Let that sink in." He's carrying a sink. They superimpose Alameda Research on the back wall where the Twitter logo was, and CZ is the guy carrying the sink into what would be Alameda Research. Which, Trung, you could break down Alameda and FTX relationship because that's kind of the crux of this as well.
Okay.
Also,
last one. One more meme.
Last one. Here we go.
This one incredible, man. So this for anybody who didn't see, originally there was Mike Novogratz photographed with a Luna tattoo, I don't know, 2 weeks before Luna imploded. And somebody's taken that image, put FTT as the banner on the wolf tattoo, and then switched out his face with SBF.
Incredible.
Just honestly, the level of memeing right now, and look at the level of craft on this is pretty incredible for the turnaround time.
I love that Jack's description before when you were saying this was superimposed onto the background. It's like the designer's coming out of you. Go on, Trung, what were you going to say?
Yeah, the quality of stuff we could spend an hour just looking through memes. It's just incredible what's happening right now.
So let's talk about the structure of FTX here, right? So FTX is a crypto exchange. It does the majority of its business in derivatives, so the futures and a lot of like leverage. You can like 10x your crypto trades because of what FTX provides.
100x.
100x. Yeah. And also for like long time listeners, we had the president of FTX of FTX US come on the show, Brett Harrison, right?
And the reason all these exchanges have a U.S. entity is because the U.S. regulators are like, yo, we can't be having this Wild West, or they're trying to rein it in, obviously. So go ahead, Bilal.
No, I was going to say, and he stepped down, I think, in the last month, was it?
Yeah.
And so that's also context for like, there were things happening in the background that were making people think like, hey, what's going on there? But anyway, back to the play-by-play.
I also think, so FTX, the exchange, there's like a sister company that Sam Bankman-Fried, this crypto entrepreneur, everybody calls SBF. We've talked about it. We joked about it with Brett, the former president of FTX US, about 6 to 8 months ago. So essentially, Alameda is like a hedge fund and a market maker. This is actually not an unusual arrangement in traditional finance, like the New York Stock Exchange was a market maker, but it was also owned by kind of investors. So it's not unusual, but it does raise a lot of questions about like if you're a customer and you put your money at FTX, the exchange, you're like, is any of this money ending up with Alameda, the hedge fund, right? Obviously, SBF has tried to, or has said that, these are kind of a Chinese firewall, they're separated. But I think what we're seeing today is that might not be the case. So what kind of is going on is there's this weird arrangement between Alameda Research, the hedge fund, and then FTX, the exchange itself. Okay, now let's bring in Binance, CZ, the guy that Dave Portnoy, Barstool founder, says scams all of his replies, which is true. It's not CZ doing it, but it's all these scam accounts. Elon's Twitter bot brigade is supposed to get rid of this, but we'll see. We already did enough Twitter last week. We don't have to get into it. But boys, so let's talk about CZ's relationship with FTX. So CZ, bit more OG than SBF in the crypto realm, right? Like Binance is one of the OGs. Did you guys ever trade on Binance back in the day?
I can't confirm or deny
able to do it, but I was told about it a long time ago.
No, back in the day,
It is the largest crypto exchange in the world by far. And I think it's 10x the volume of like Coinbase, just give people an idea. And the interesting thing is they had invested in FTX, like early on. CZ had seen what SBF was doing when he created the exchange. He's like, you know what? Maybe this is a potential way to help me get into the US market, or, this is a friendly competitor that I'm okay to kind of stake. So CZ invested in FTX. Again, there's all these kind of like ancestral things going on. But CZ eventually, I think last year or a couple months ago, wanted to exit his investment. And what he ended up doing with Sam Bankman-Fried is, I believe CZ sold his stake in FTX, and what he got in exchange was a lot of these tokens, FTT, which is the FTX token. Have you guys ever had FTT, the token?
I haven't, but it's basically used for trading fees and stuff like that, I believe. So it's kind of like how, again, I don't know exactly, but I think Binance has BNB, but I don't know if they're exactly equivalent. But like Binance has their own,
Binance also has its token, right? It's like a lot of these exchanges have their native token, and the joke that we've had over the past years, like when token is like, when is this crypto project going to have its own token so we can all benefit in the upside? Like that's the running joke, right?
Yeah.
So now it looks like CZ has $2 billion plus of FTT. And as we've talked about in previous crypto crashes, like the value of these tokens is just basically, what is the actual value of these tokens, right? It's like, what was the value of Luna's token? And how quickly did that Luna project token go to zero? It's a lot of it is just confidence based. So, we talked about this over the past year, and why it's so interesting is SBF also obviously slowly became the face of crypto, right? Like, I guess in Western mindset, would you guys agree that kind of became the face?
Yeah, I mean, I think he was on Fortune magazine's front cover in the last
they did a whole PR push, right? Like he got in with like Tom Brady. Obviously, he's a big FTX sponsor. They sponsor the Miami Stadium. When we talked about it, they dropped so much money to build mindshare. And like we talked about, is like the reason was FTX was originally for professional traders, but they really wanted the retail market, which is in hindsight kind of funny now because the retail market is completely clapped. So rewind to CZ's relationship with SBF. He owns a lot of FTT, which is the native token for of FTX. But also, as it turns out, a lot of Alameda Research, the hedge fund's assets, are actually just FTT. So what we're seeing now is a bit of a, how would you guys call this? Super incestuous? Like what would you describe? It's like the assets you're presenting to potential lenders and partners is just what you can pump yourself up, right? Like how would you guys describe that?
Sounds like the US economy, but no, I'm not messing around. No, you mean you issued debt to the world in a... No, I'm messing around. But
does it sound like Luna in a bit? Like in the similar vein of like Luna saying, hey, look how much like our token's worth, and they're going to lenders being like, oh, look, this Luna token's worth so much. Can we borrow X amount? Does that sound about right?
No, yeah.
Okay, so that's the setup now. The SBS's hedge fund has a lot of FTT, which in a lot of ways is just imaginary, right? The value of it. Obviously, he's supporting that value with a big exchange and kind of his reputation. But over the past year, and why we talked to Brett, the former president of FTX US, a lot of is that the amount of regulation that they're trying to navigate, right? Like SBF is always in Congress and always testifying that crypto needs to be regulated. So we had the running joke. Remember the shoes where his shoe was improperly tied, and that was everybody was giving that a good run.
Yeah.
So over the past couple of months, SBF has aggressively been trying to tailor the regulation, and he obviously has a big presence in the United States. He's a big lender to the Democratic Party, so he's trying to influence regulators to the benefit of crypto. But it sounds like, specifically, and not surprising at all, more to the benefit of FTX than maybe competitors like Binance or Coinbase. So it sounds like CZ caught wind of what SBF was trying to do. And he's like, oh, hold on a second here. I have a shit ton of FTT tokens, and I have leverage over FTX and SBF if it sounds like they're trying to do me dirty. So yesterday, which is Monday, what happened? CZ, there's a report that came out from CoinDesk that said they got hold of Alameda Research books. And they looked at the books and they said, you know what? It looks like there's a massive hole in this in their asset holdings, and it looked like that they had borrowed, or their equity in, or the actual assets they own, which was not against margin or lending, was about 20% of the entire portfolio. So it sounded like that Alameda Research was doing something very similar to every blow up we've seen. Three Arrows Capitals, which we've talked about, the Luna blow up, the Celsius blow up. They're all chasing extra yield. Yeah. So now the question becomes what we talked about earlier. Were they using customer funds from FTX to potentially lever up the Alameda Research hedge fund? So that's the question, right? Yeah. So if I were to present that to you guys, what do you think was a likelihood of that happening?
Go on, Jack, if you've got an idea.
Sorry, I was going to say I have any idea. I was just curious if we know the percentage difference in like the money they raised and the money they used to operate the business, and how much customer funds were deposited on the platform. I don't know if that's the right grammar, but you get what I'm saying. Right.
I don't have the number here, but
it's got to be dwarfed. It's got to dwarf the investment by a lot, though, I would think, right?
Yeah, exactly. And there's another thread here that we'll go into. Why the other thread, which comes from a hilarious name, Wasi Lawyer, is very thorough, but he describes why he finds SBF going to FTX a very interesting move, which can describe what we're talking about right now. So basically,
Trung, can I just add one thing? You might have just touched on it before, but one of the other things is CZ, like basically they owned a bunch of FTT too, right? So that was that's kind of also what triggered it. You might have mentioned that before.
They got that exactly to your point. They got that, just to reemphasize. A big chunk of FTT was when they sold back out their stake in FTX back to SBF. So that was part of the transaction. They got about $2 billion in FTT.
Yeah, and because I think what's his name, CZ, basically came out very recently, a few days ago, saying SBF's been basically chatting shit about us to regulators or something like that, and because of that, I'm gonna get rid of. Well, I'm not saying it's because of that, but he's gonna basically sell.
He found the CoinDesk article,
the one that you referenced.
Exactly. He's like, oh, it looks like the books for Alameda leaked, and it might not be as secure as it looks. The Alameda CEO, Caroline, actually wrote out and said, she's saying basically, and listen, what we learned from Kwon and what was the other guy? Zhu Su, the 3AC guys, and actually recently,
Celsius did the same
and
thing.
Celsius, and if we're talking about traditional finance, Credit Suisse a couple of weeks ago or a month ago, anytime you have to go to the market and say, yo, we're good,
we're not good.
You're not good.
Yeah, exactly.
Like the Credit Suisse one. This isn't just crypto, right? Credit Suisse goes out like 2 weeks ago, and they're like, "Hey, sending like an email to their like biggest partners. Everything's good here." The second you send that, it's over, right? So the CEO of Alameda says everything's cool.
Yeah.
But CZ had already said, we're going to dump our FTT.
And I think that's like $2 billion worth of money. So that's a lot of pressure.
And Caroline tries to come in from Alameda. This is the FTX's sister hedge fundy thing. And she's like, oh, no, we're good. We'll buy it at $22, which is like a pretty safe valuation. But I think it dropped to 13 or 12 last night. And basically, if there's one takeaway from this, it's a Credit Suisse, like traditional finance takeaway. If you have to tell people that everything's okay, it's not okay.
Yeah.
And the entire financial industry is run on trust and confidence, and that just goes right out the window, right?
Exactly. And the other numbers, sorry, Trung, I just have the numbers here on the leak. Again, sorry if you already said this, I might have missed it, but the assets, Alameda apparently had 12 billion in assets, 7 billion in liabilities, but half of their assets are FTT tokens.
Exactly.
So if that is plummeting, people have, he signaled to the market, we're going to dump 2 billion, right? That's going to tank the price. That's enough to tank the price. That is what essentially caused a bit of a bank run. People, and they know Alameda is connected to FTX. They're like a market maker or whatever. And so like in the last few days, a bunch of people started trying to withdraw stuff from the FTX, the same way they did with Celsius, the same way they did with Luna, etc. And it's the same kind of story with any kind of
FTX was pausing, or people were having difficulty withdrawing some funds, right?
Yeah. exactly.
Well, I'll give you you guys know the legend Haralabob. He tweeted out earlier this morning. He's like, oh, wait, Jack, you sent that. He's like, one of my buddies will sell his entire FTX deposits at 93 cents on the dollar. He's like, this is a legit offer. If you have faith in FTX, and he's a total whale, right? Haralabob is. And then the other thing we talked about, we didn't bring it up, but Kobe, also legendary crypto trader, changed his name from FTX used to sponsor his podcast called Up Only, and he's like, we're recording a live episode now, brought to you by Binance, which is objectively hilarious. So basically, that brings us all to today. So we're suspecting that Alameda may have taken customer funds. We don't know that. What we do know is that a lot of their holdings are FTT, the token. And if that goes down aggressively, which it is right now, that could blow up Alameda. If Alameda is blown up, what does that do to FTX, right? People don't believe their deposits are going to be safe there. So that is where we are with the situation as of this morning. So before we get into the lawyer's thread, which is very good, what are your guys' thoughts as of now?
It's wild. Jack,
well, let's add this. Let's make this clear. CZ, we're talking about 4D chess. CZ started all of this loss of confidence, because he's one of the two biggest hitters in crypto. Brian Armstrong from Coinbase is the other one, right? We're talking about three godfathers of crypto. Not godfathers, but like the three big guys on the exchanges, right? Yeah. So CZ, do you think he 4D chessed this?
I mean, well, I was just going to read, I kind of agree with Autism Capital on Twitter here. Autism Capital has said, CZ just executed the most gangster play we've seen in crypto ever, period. The balls on this man, truly bravo. Also bravo to Sam to choose the correct option that protects customer assets, swallows pride, and not burn everything down in an unnecessary fight. What a show, all caps. And that is perfectly summarized, honestly, because like, we don't know the full details of what's been going on, but even the public stuff alone shows he was like, oh, well, I'm going to sell $2 billion worth of this. That's already enough to tank them. And then he's coming and scooping it up at a discount, essentially. And on Sam's side, I also agree with it. Like, this could easily be, and we don't know what's going to actually happen in the end here, because it might be that it doesn't go through for whatever due diligence reason. But he could have easily just been like, oh, no, I'm not going to sell to the guy who's trying to take me out. Right? And that would be catastrophic, because I think like Celsius was pretty terrible. Luna was terrible. This would have been another level if that is what happens.
Because it would have zeroed everyone, right?
Yeah. If they're the second biggest exchange after Binance, it's crazy. Imagine Coinbase like basically ceasing to exist. That would be an insane level of an event. So, yeah, I kind of disagree with that. CZ's like coming up on top here.
Yeah, I'd love to get Jack's thoughts to where we are right now. What do you feel about the CZ move here? Bilal thinks SBF, all in terms of alternatives, did the right things to potentially make the customers whole. Could have been a lot more, I guess, what's the word? Vindictive. Or if you get painted in a corner like that, you just want to do crazy shit. So what do you think?
Yeah, I was going to talk more about how new FTX is relative to Binance, and like the stability that provides Binance, like being as early as they were. You imagine early conviction. Imagine the early. Sorry, someone's ringing my phone. I keep muting it and they keep ringing me for some reason.
Right. It's SBF.
Yeah.
It's telling you to shut up. Yeah.
Like they were basically on tilt, growing with leverage in every direction. We talked about it last year, right? It's like you're plowing the kind of money they spent on marketing, the amount, like the speed they were trying to grow. It's a high risk strategy that they undertook in every area, right? It didn't have the hallmarks of like sustainable business growth. It's all done on leverage, raising massive rounds, and Binance might have made similar moves and has like some of the exhibit some of the same qualities, but it's so much more established and probably growing from such a stronger foundation just in terms of like collateral and everything. I don't know. I was just finding these businesses kind of crazy too, like how you get to the valuation you get to when really where does the revenue come from? The trading fees.
Yeah.
And we've seen this happen with a bunch of different businesses that basically facilitate the same transaction, right? Robinhood. It's like we think this thing's going to be the biggest unicorn in the world. And as soon as the market turns down, like, guess what? People aren't like spending 8 hours a day staring at these charts and apps and all. So I think basically Binance is big enough to weather this like downturn. FTX wasn't. And like even all the things they've been doing marketing wise, I think maybe this play into regulation and like, you know, getting into DC, things of that nature, that's another attempt to like stabilize your foundation, but that's still a small company. And then we've talked about this a bunch, tying a lot of risk to a liquid token, not even a traditional financial instrument, like a
hard asset. Yeah.
It's like that exposes you to a crazy amount of risk too. And then for your competitor to like own a significant portion of that is like, you basically got your pants pulled down, right? They can make a ridiculous difference to
which is
your
what
standing.
happened. Essentially what happened.
Yeah. So I think, I don't know. I'm not really, well educated on like the way in which these firms at that scale do battle with one another, but just seems like they were overexposed, over leveraged, and I guess trying to kind of make those leaps and grow in ways that stopped working when the market stopped going up in a straight line, right? That's all of this FTX stuff. I feel like all the fervor surrounding it was like during the most obscene bull run that we've seen in crypto. So,
Well, let's talk about this. Like,
what's the
Jack,
Warren Buffett quote? When the tide goes out, swimming naked.
You swimming naked.
Yeah, exactly.
Well, here's the thing I'd add to Jack's point is let's look at some of these, like the Eric Newcomer thing was at a $40 billion, $32 billion valuation.
Yeah, I've closed the tab, but yeah. Go on.
Let's take the high growth drawdowns that we've seen, right? I know we had a chart here of all the public tech companies, high tech growth companies that are just.
I can share that as well while we're talking. Go on.
Yeah, so let's take the median drawdown for the high growth tech stocks, right? Like the Shopify's, the Twilios, the whatever else, like
all these shit coins. You're talking about all the shit coins, yeah.
So call it 70%. Yeah, here it is.
Crazy. So for people listening, do you want to just share some of this? Is a chart from Jason Calicanis.
Yep.
So he's just asking what people would value most in 5 years. But is this a drop in the last year for these companies, or is it from the high?
I think it's from high. It's from the high.
It might be from the highest price. Yeah. So this is a bunch of growth stocks, bunch of growth companies. And it's the value. I'm assuming it's the value of
these stocks. It's really painful.
100%. And so like there's companies like Peloton down 91.4%, Affirm 88%, Asana 85%, etc., etc. You can go all the way down to even like Square down 76%, Coinbase 80%. I mean, Facebook isn't showing on here, but I'm pretty sure Facebook is like 71% or something.
Well, let's call it 70%. Let's call it 70% drawdown. That means FTX is a private company, so you could even call it 80% drawdown because of the illiquidity premium. Discount. So if you're not liquid, you get a discount typically. And so 80% from 32 billion. What is that? Like six billion?
Public maths. Yeah, go on. Yeah,
5 to 6. So they were worth 5 to 6 billion if they're publicly traded in reality, right? Or give it the Coinbase drawdown. So it's like FTX was not worth 32 billion, to Jack's point, at the hype, at the headiest days, right? That was its valuation. So its actual valuation, pre-CZ pantsing them, as Jack described it, is like 5 billion. But now, because of the structure of what happened, they legitimately might be worth, like, there's a world where it could be worth zero, right? Because they easily, because of the hole in Alameda,
they're basically covering their debts equivalent. So you're basically getting it for zero. Or like, though in the UK, you'd often get a company being bought for £1.
Yeah,
but you're already taking
because they're
on
gonna
all
cover
their debt.
their liabilities, right?
Yeah.
0.0000001% per customer for a CZ.
Yeah, exactly. Seriously though.
Insane, right?
Yeah.
So let me actually walk through this Wazi Lawyer thread at Wazi Lawyer. It's actually very interesting because he's basically saying if you're SBF, and Bilal, you brought this up, you're like, did SBF quote unquote do the right thing by the customers? I mean, he probably did the wrong thing because this whole thing blew up. But let's walk through Wazi. Yeah, go ahead, B. So SBF could have done the following. He could have got 3 options: get emergency debt financing, seek new equity investment, or liquidate and buy time. Liquidate assets and buy time. So what he's done, though, is he's gone to Binance and CZ, who started the entire process. And what this actually means, as far as Wazi Lawyer is insinuating, is that they did use customer funds to juice up Alameda. And the reason why he believes that is because I think he really does want to make the customers whole. And if he had gone through the other steps, it probably would have wiped out a lot of customer deposits. So I'm wondering why he's doing that, though. Because Wazi writes here, instead of seeking finance from any other party or buy more time by throttling withdrawals, SBF bent the knee to Binance. Does this mean that FTX has such a big hole that we weren't talking about an emergency swing line? So yeah, it sounds like SBF basically didn't want to go the other routes. They did have a massive hole, and FTX and SBF, to Bilal's point, did want to kind of make the customers whole. I wonder if that has to do with the fact that he understands that if the customers got wiped, that's game over, like for the crypto industry. Like, what do you think about that as a thesis?
Yeah, I think so. And if you had the ability to do that, but still ethically, like still wanted to make an ethical exit, you could just say, hey, we're shutting it down. Everybody take their funds out. It's obvious that you're like savagely over leveraged if you need somebody to come in and basically replace the funds that you say you are holding for these people.
Yeah.
And I don't know. I think these, isn't it like where is FTX International headquartered? Bahamas or something?
Yeah.
Probably,
so
yeah.
Maybe like the jurisdictions where these things have been set up have allowed for less risk management, shall we say, right? And it feels to me like it's just a customer acquisition play by Binance. They know that they've got them, and maybe they have to pay a couple $2 billion even to like make everybody on the platform whole, but I don't know, maybe they can stand to absorb that. I don't know what Binance is worth.
Oh, yeah. For them, they're getting a steal probably because they've got like all the infrastructure, assets, customers, like they're more importantly, they're taking out the number 2 player, right? Like to one of you guys talked about this earlier about the valuation of these companies. The reason they were valued at that company is because someone was willing to pay that valuation at some point, right? Whether that's the investment rounds or the public markets for like Coinbase, etc. So in this case, it's just the whole world has obviously changed. The investment environment has changed. There's deep recession. All the growth stocks got smashed. Crypto got smashed. So now we're just in a state where things were already worth less anyway. But now, if they're in a vulnerable position, they're just picking them up. In normal terms, in a non-crypto growth market, like in traditional company terms, there's mergers and acquisitions all the time, and you buying your second, the number 2 player. Most of the time gets blocked depending on which industry, but a lot of the time for competitive reasons you get blocked. So again, we don't even know
this though on the international.
I don't know
front.
I was going to say here, I don't know how that even works because it's
well, you can know, to your point, you could have like, where is Binance's biggest market? They're Asia focused, right? So you conceivably could have maybe Singapore or China. I think they're out of China now. Probably too much risk, fair enough, if you're trying to run that type of business. But yeah, you're 100% right. If this was in the United States, especially under the current regulatory regime, there would be a lot of questions as to, is this okay?
Yeah,
Dude, crazy.
So Binance is apparently estimated to be worth $300 billion.
Still?
I just tried to find out where is
what month is that? That valuation
today.
Oh, today they're worth
There's
$300 billion.
A TechCrunch article today. I don't know where they're getting the number from, but that's what I said, $300 billion. And where is Binance headquarters? It doesn't have a headquarters.
In the cloud, mate. Like with Andreessen Horowitz.
Yeah.
It's a network state.
It's a network.
There we go.
It'll be interesting to see who gets involved, because there's probably plenty of people who don't want them to gobble up a good amount more. And there was an argument to be made that the FTX attempt to like get closer to the lawmaking process and legislation writing was like all done in good faith, right? It was like, let's steward the crypto industry in, you know, however you want to interpret that. I think is obviously a play to like make their business bigger, but whoever saw that as a positive way of them engaging is probably not that keen on Binance gobbling that whole thing up. So we'll see, but they may be powerless to stop it too. Like who knows like what the jurisdictions are of what agencies get involved in something like that. We'll see.
And what the other question I had, and this might be a really ignorant question, but I'll ask out loud. So quick question on CZ. One of you two might know. So CZ is Chinese, but he actually spent a lot.
Chinese,
I think he grew
Canadian?
up Canadian. Yeah, I was going to say he grew up in Canada, I think in Vancouver actually. And so he spent a lot of time in North America, obviously. I don't know where he's actually based nowadays, but like, what is the relationship with Binance and like China itself? Do you have any, you know, the way we talk about TikTok and China, and like, is there like a very different relationship with Binance
to my understanding, I think Binance left or went cloud first, or
There's
whatever
no
their
servers in China, it says.
Yeah,
that's it. Okay,
I think whatever their relationship is, or wherever they are structured now, is because they didn't want to. They didn't
want to be buddy.
Well, because they just couldn't. Right? You, like to your point, they'd just be owned by the whatever the
you can't use Binance in China either. You know that, like you
can't. Yeah, you can't even use Binance in China.
Got it. Okay,
Binance
that's good to know.
Reiterated that Binance is not a Chinese company. It was never incorporated in China. The country continues to ban cryptocurrency.
They just clean up. Well, there's some loose ends here that are worth noting. Is, listen, a lot of Binance activity has been much criticized, right? Because of how opaque they are, because they are run, to Jack's point, in the cloud apparently, right? If that's what it's saying, and they don't really have a domicile to be regulated. So, like, I think ones that I heard a lot is like, you know, stuff that people say about crypto as a criticism, like, oh, money laundering for X regime, the Iranians or North Koreans, is like those charges are levied at Binance quite credibly in the sense of, who is regulating them, right? Who is actually overseeing that company? And that's why, again, these assets that are being FTX being purchased, not FTX US, right? That's a totally different beast. FTX US is its own thing. But who knows what's going to happen now?
Well, there's reputational collateral damage by a massive amount too, right?
Yeah.
Well, key question is, what is the stadium going to be called now, man? Is it going to be
Binance.
Binance Stadium or whatever? That is wild, man.
I think our boy Ramp put that out already.
I probably read it this morning. It's bubbling.
Someone edited the Wikipedia page already, by the way.
Yeah.
BNB Stadium.
Oh my God.
Killing it.
Yeah.
Oh my God.
It's good.
Anything else on that, boys? I mean, I think we covered it pretty well, but is there any loose ends, like you said there, Trung?
It's gonna be a good Netflix. It's gonna be a good Netflix film about this at some point, right?
I mean,
2022 crypto shit.
Not just this story, but like the whole thing. It's gonna be like The Big Short.
We did The Big Short. That's what we
10.
want. That's what we
want. The Big Short.
Adam McKay, partners. Well, former partners, Will Ferrell. Well, let me add this. Is the things I would ask are the following, and Jack brought up at the beginning, was how misallocated were the customer funds? That's going to be a big deal, right? What were any routed towards the Democratic Party? That, or any, not just Democratic parties, like that would be
SBF
insane.
Is the second biggest Democratic donor this cycle. You know that?
Absolutely wild, man. I wonder what I would love to see what the tweets about that are right now. I don't see anything, but dude, so insane. The whole situation is insane.
Yeah, I mean, this is not beneficial to me to say this because of my allocation in this area, but this is like they're essentially like trying to build a sustainable casino, right? That's the model here. And then themselves having the advantage of seeing how everybody else are placing bets I think their thesis is that's going to make us bulletproof, right? We have it's the same Citadel thesis. We have like the order flow of everything in the world, or enough. We have enough data on the market that we can out trade our customers. Basically, that's what the hedge fund is, right? But they weren't able to do that.
Yeah.
I actually, to your point, Jack, I'll tell you something you made me think of while you're explaining the casino part. Think about when Luna went down, Mike Novogratz, big crypto entrepreneur, how much shit he took, right? Well, he did get the Luna tattoo in his arm. So understandably, but FTX brought in a lot of platinum investors, right? You did the Eric Newcomer thing with Sequoia was invested, Paradigm was invested, Ontario Teachers Pension Plan.
That's
CEO,
that's wild.
Dude, who closed that pitch? Jeez.
Yeah, you know what I mean?
Can you imagine,
and remember,
imagine being in that room? Can you imagine them?
That sounds great.
I know. I think about that. They gave the Jack pitch he just had. Listen, we're trying to make this casino stuff, but like way more interesting and way faster and like digital.
And we know everybody's cards. We know everybody's cards.
And
Are you trying to
everybody's
retire in 27 years or in 3? So that is the pitch.
Yeah.
So, yeah, exactly, right? When do these teachers want to retire? When do the teachers of Ontario want to retire?
Insane, man.
So
that's
like,
wild.
And then Bill Clinton and Tony Blair, the former prime minister of UK, were in the Bahamas like 6 months ago. Like just unbelievable,
top signals
right?
all over the shop.
Just top signals, man. And so all this is happening. People's reputations, the amount of reputational laundering that was happening with guys like Bill Clinton going down there. And listen, it's not like Clinton is not spotless at all, right? As we well know, literally not spotless. There are spots everywhere. But I think that's going to be an interesting thing, like the follow from the people involved with this. And remember, like SBF was one of the loudest proponents of earn to give, of the effective altruism movement. Bilal, this is your domain, buddy.
Well, and also, I mean, I will say apparently so is CZ. So hopefully it's just the goodwill's passed on to the next rich person to keep that passing the baton, as they say. But no, I mean, it is pretty wild, man. This is I think it's all happened so quickly this morning for us. Like we were preparing to record, and like an hour or two before, this stuff drops, right? And we were like, oh my God, what the hell is going on? I'm still digesting it. And
well, we'll give the listeners a little behind the scenes. It's like I came late, like 15 to 20 minutes. And part of it was like, I'm reading all these threads and looking at all the memes.
Absorbing it. Yeah.
And so anyways, that was a good 50 minutes. So I think we mentioned at the beginning, Bilal, why don't we close with this? Let's revisit our earlier predictions on crypto. Like what we were a year ago versus now. I think people will appreciate
we did I remember the episode was like
we did a
bear
revisiting
market episode. Do you remember that one as well?
Fud Bilal.
Fud Bilal, exactly.
Why don't we revisit that revisiting? Because this is, to your point earlier, Bilal, this is like a layman style type of move. So Bilal, why don't we start with you? What do you think?
Well, and so what's the question is
just revisiting
our crypto, just how we feel about
your
crypto
sense
as a
and
whole.
your sentiment.
Yeah, I think the sentiment for me is when you're in the euphoria moment and there's, JPEGs being flipped for hundreds of thousands of dollars and we're just getting used to it. And I'm not just picking on NFTs, but there were lots of things like that. Random shitcoins going to the moon. We all know, right? Like we're like, this is stupid. But there were so many things that were stupid for so many years that you just assume it's going to keep going until
maybe we're stupid. Yeah, exactly.
Yeah, and we could still be being stupid right now because it's November 2022 now, and there could be 2-3 more years of basically a deep recession. Like outside of just the investing environment, I mean, like we might only be scratching the surface. We've just got all these tech layoffs. Like if you told me even a year ago that Facebook are going to be cutting jobs. Twitter's going to fire 40-50% of the workforce. Google doing hiring freeze, if not more.
Insane, right?
like all of the tech
Facebook
companies.
one is huge, eh? Like, Bilal, can you give us
massive.
the view? Okay, can you tell us why, like, in your gut?
Yeah, I mean, I was just going to say, if their stock price is down 71%, you know, they're spending a crazy amount of money on the metaverse big bet. They've had to basically pivot the company towards this big bet because their core business is not going to grow at the rate it needs to be a growth, you know, technology company, essentially. But the amount of money they're spending on it, I didn't realize until recently, like, is an insane amount of money, right? Over like a 10-year period or whatever they're committing to. So, yeah, so they've got to a stage where the flip side is we know in the frothy market how many people, even now, man, like 2 weeks ago, I'm on TikTok and you're seeing, I'm a PM at Meta, I'm a PM at LinkedIn, at Google. This is my day. And it's like, get coffee, 10:32 a.m., go to the rooftop, go to the gym, gonna go play volleyball. And look, I work there, right? So I'm not like shitting on the people.
Did you hit the kombucha on tap? Just be honest.
Oh, yeah, let's be clear. A few more things on tap. Yeah, so I was definitely making the most of it. But that is the trade, right? That we're in a good environment. You go there, if you're a smart person, you're well qualified, you can go there, earn a pretty decent salary. You could probably make more money elsewhere, but you're like, oh no, I'm going to give up a little bit of the money for work-life balance and the ambition that a lot of us might have had that you can't lose at a big company. And so I think a lot of people have been coasted, and that's kind of the summary, right? Like a lot of these companies are over-bloated. Maybe not at the
baby.
Exactly. So there's that element. So that most of the big tech companies could probably easily lose 20% of the workforce, and their actual productivity would stay similar, if not more, because it will give people a kick. But you know, 50% of Twitter is a big one, and that's really sad because, like, yeah, I literally spoke to some of the people there in the last week, and they're like, you know, it's a shit show, right?
Guys, hold on. I gotta mention this because I just got a message.
Yeah, do it.
Kobe, we need to talk about Kobe, the legend, and Up Only TV. Kwon and Shkreli are on the live stream. Martin Shkreli just told Kwon jail's not that bad.
Oh, no way.
Bro.
Incredible.
This is absolutely out of control, man.
Yo,
This
Shkreli.
is absolutely out of control.
I know. I don't know if are we allowed to talk about Shkreli, and can we talk about him?
This thing's happening.
Well, you
right
had a call
now.
with him in the past, right? Like you did an interview with him.
In the past. This is absolutely wild,
This
man.
guy does content, man. I didn't especially want him on the pod, to be honest, but I was like, man, this guy is gonna be top content either way. He's an entertainer. Anyway, let's get back to what we were saying. What was the question, Trung? I think you were saying about all these big companies being bloated.
Yeah, I was just saying, like, the Facebook firings to you must have been crazy because in the heyday, like when you were at peak big tech, you know what I mean? When you were at Google, it's pretty close to like these guys are unstoppable. And like this to happen,
that's kind of what the last thing I'll say was, if you told me a year ago that the companies like big tech will be having to fire people, because if you just look at the macroeconomy, where's the growth? The growth is coming from technology companies and, you know, technology and science. Those are the only kind of areas really growing, and then climate, right? If you kind of bucket them into one big thing. So you just assume we're going to keep investing in it, going to keep growing, going to keep inventing stuff. And then the people in trouble are going to be traditional industries. And maybe they're all kind of fucked, to be honest, right now. But I never thought, you know, a company like Google, Facebook, in our kind of like recent times, especially a year ago when everything's so frothy, a year later, people having to cut that many jobs is pretty crazy. So anyway, yeah, I mean, that's kind of how I feel about it. But yeah, what about you guys?
Jack, what are your thoughts on revisiting crypto?
Well, you know what's crazy about what you just said, Bilal? I remember when we had that conversation with Brett. Didn't they have 200 employees or something? This is FTX US,
yeah.
right? But
and how
assuming
they were quite lean,
the entire company.
Assuming they had that philosophy across all of their businesses, right? Like it was a labor light, capital heavy business, and
leverage
for the
heavy.
Facebooks, right? Yeah. For the Facebooks and Instagrams and the whatevers of the world, they're riding on a trend that is not financial market tied, right?
Yeah.
So like you're riding this trend of people going on a screen and talking about what they had for lunch. And it doesn't matter whether your stock moves.
And they're creating a
or the
trend, to be
market
fair, as
moves.
well.
So it's a behavioral thing. Whereas like FTX is so exposed to the whims of the financial markets that if you are over leveraged in a situation like that, you lose users by an exponential rate versus a Facebook or wherever else. It's like, okay, we can go in and we can like make a better product feature. We can get people to spend more time on here. FTX is very, very heavily dependent on, the average retail investor is going to participate when the market is moving up and to the right.
Yeah.
Right, we know that for a fact. That's when the game is the most fun. That's when people play it. Yes, your institutional customers and stuff are going to play the market regardless of the conditions, but they ran into, I think, a change that they could not weather behavior-wise, right? And I think they were trying to overcome that with the Tom Brady, with the stadium, with the Larry David, like, let's get everybody on there. And it was smart. It was still like, I still stand by a lot of the stuff we said, like their expansion into like educating the customer and doing interesting, being creative to do that was intelligent marketing. But the force against you in terms of like whether people want to participate in this market or not, you just can't overcome it. Like you can't go and build a VR headset and like let people escape from.
You could try. Spend $10 billion a year.
Yeah,
you could try.
Well, Jack, just to your point, I think the summary of that is like something we've talked about since episode 0, and what we've always harped on about, especially with crypto, is what are the use cases? And like every time we get to it, we're talking about a new idea, step in app. Oh, I'm going to get paid to walk around like a lemon. Yeah. Okay. I used it for a week just to test it out, just to burn my money. And I was like, this is the dumbest thing. I'm basically not making money. I'm just being given a fake money here. So like that sort of stuff, where's the use case? And when everything's going up, use case doesn't matter as much because you're just addicted to the dopamine of your number going up. But
that's
when
the game is the use case, right?
Exactly.
Well, it's like Jack was saying, that they're going to the Ontario teacher pension plan and being like, listen, how quickly do these teachers want to retire?
Exactly.
Yeah, I would also say like that has been so much of the messaging in all markets, right? You go on CNBC.com, you'll get a pop-up that says, get amazing tips from Jim Cramer on how to like bulletproof your retirement. It's all bullshit.
Yeah.
It's all it's all marketing nonsense versus like, this is what clouds I think what the real innovators in the space of people that built these technologies in the first place are probably and have vocally been like the Vitaliks. Like, yes, I did envision that there will be better applications for this than trading cartoon pictures, right? That wasn't why this was conceived.
It wasn't in the white paper.
Right. and the reality is you build something permissionless, you are going to get the highest volume of mental idiotic stuff happening. And the long-term bet is that the technology is fundamentally superior over a longer period of time where people start to value it for what it enables at a protocol level and what can be built on top of it.
Yeah.
But in the short term, and maybe we never ever able to escape this, right? It's like the things that people build on it are just speculation machines as a function of this thing being connected to 4 billion people at any one time, even if it starts out as something that has a very simple and refined objective. Like a Uniswap, right, is an amazing protocol tool that lives by itself. It's not leveraged. It's a peer-to-peer financial system, smart contracts governing the relationships between customers and all that stuff. That, to me, is a very, very impressive piece of technology, but it's surrounded by people who act as, I think we talked about this when we talked about SBF the first time. He don't give a shit about crypto. He's just trying to make as much money as he can, as fast as he can.
Yeah, he said, I would sell orange juice futures if that was what made me the most money or whatever.
Right, and he understands that he can, if he can build features, if you can build features that are like, I'll give you 100x leverage, and if we'll liquidate you all day long, we'll add that to our balance sheet, and then I'll go and gamble it on orange juice futures because I'm smarter than you, and then I'm going to donate all the money afterwards. And I think people weirdly respected that. Like he's kind of he's gone into his villain arc now, but he was celebrated for a long time.
The
on
Forbes
crypto
cover,
Twitter.
like Buco Capital, a hilarious Twitter account posted the Forbes cover. Is this the next Warren Buffett? And he just goes, no.
Crazy.
Well, guys, I have 2 follow-ups. This might be of interest. So this is my thought about, has anything changed? I think from the last time we chat, not really. Is like, listen, first of all, I only hold Bitcoin and Ethereum, and I've talked myself into the Michael Saylor. This is going to be the long-term, like, listen, you want Manhattan built on a block of granite, right? So like that hasn't changed. The Tesla sugar cube, for the listeners, if you remember that, we were told that. Yeah,
that did it for you? That did it for you?
When we asked Michael Saylor what would convince him that Bitcoin was better, he's like, listen, if somebody came to you with a Tesla that could be powered with a sugar cube, yeah, you'd want that. But that ain't happening. That's not what's happening here. Bitcoin is the best we have. But anyway, so the thing I would add is what has changed, and I was circling around this, but somebody just posted the perfect tweet about it, is clearly if SBF, who was like the face for US regulators, was that guy, and this happened to his company. So if you're the US regulators, okay, we got it. Like the hammer needs to come down, right? Like something needs to happen. Unfortunately, for the ethos of a lot of crypto people, they're not going to like it. But if SBF is the guy and this is what happens, it's not a great look, right? So Kevin Werback tweets this. This is an interesting tweet. He writes, the biggest blind spot in crypto regulation isn't DeFi. It's the offshore exchanges like Binance, Bitfinex, Tether, and Deribit. They dominate the global market. Their only hope is for the US to keep ignoring them. Binance acquiring FTX International makes that much less likely. So in a way, Binance has put itself on the radar for regulation. But here's what's interesting. I think Binance had to do it to save crypto, and this is why, and we didn't even mention this. If Alameda had to do a fire sale of their assets, remember, they hold Solana, they hold Ethereum, they hold Bitcoin. If they had to do a fire sale of whatever, I guess their assets were 5 to 10 billion, but like the contagion from that could have completely tanked crypto markets. And as we've seen with Luna, 3AC, Three Arrows Capital Hedge Fund, and Celsius, when these things blow up, they take everyone down, right? So you have to think about what Binance is thinking. Binance is like, we're going to basically make the competitors, holders whole. Yes, we get to acquire customers, as Bilal alluded to, but now we've potentially exposed ourselves to US regulators. He had to weigh off the odds, right? He's like, listen, I can't acquire these customers on the cheap, and I have to save crypto, but at the same time, now I'm exposed potentially to more regulatory scrutiny. So
can I just add one thing as well?
Yeah, of course.
These guys are not crypto. Like, I think people like to, this is a human thing too. It's like, you want to blame a person. Like, this guy is like, the reason why crypto is, it's like, these guys are using this technology, build a platform, build a business to like tell a story, to create a narrative. It's like Bitcoin, Ethereum doesn't care or know who SBF is, who CZ is, who anybody is. Like that, this has been co-opted in a way that, you know, just like leverages the memes of the way business has been done for such a long time. And we, as humans, always do that, right? It's just repeat the things we were doing before with this new thing, despite the fact maybe it has like a fundamentally different set of underlying qualities that could enable something better to emerge. It's all, you know, the same crap over and over and over again. And until you get a critical mass of people to understand it from a very different level, like until you get 2 billion people thinking like Michael Saylor, this shit is just going to happen over and over and over and over. And, and you know, even Saylor, he's playing the leverage game too, right? It's like, he's not in a position where he could just say, hey, we're just starting to accept Bitcoin for our business and we're going to run like...
Oh yeah, you're right, dude. He's taking out, he's doing debt financing to take that money to buy more Bitcoin.
Yeah, everybody's like out over their skis, like hoping that the world believes their story the most, you know? And that's always has been astronaut
the case,
shot in the back of the head,
Yeah. Well, I guess the question I have, another frame for this is, we talked about use cases. We talked about how things collapse in a bad market. But if we strip out all the people and all the stories and all the kind of bullshit, how different is this to any other market collapsing? And so like we just showed a graph earlier of 91% down all these tech stocks. Right now, those tech stocks are real companies with real customers and products, etc. They're not like worth zero in terms of, creating. They're not just a financial instrument like a shitcoin.
They
So you
have
could argue that
assets,
as
they
well.
have
They have
customers,
assets.
they have, like,
they've actually
yeah.
tried to create something of value, right? But I guess the argument is something we talk about on the pod all the time. There's an underlying business that, like, when I evaluate in my very amateur way of like, do I buy this stock? I'm like, do I like Google stock? Do I like Apple stock? Whatever, as a company. Oh yeah, Apple iPhone, amazing. Apple, whatever. And then the second part is the value correct? Does it look like a good price, or is it already way overpriced? And those two things are not always in alignment with each other. And like, if you follow the, efficient market hypothesis, that should already be figured out by the market, but that is not clearly the case, because we wouldn't be having 91% drops if everything was so efficient.
We wouldn't be having this conversation, Bilal.
Exactly.
We wouldn't have started this podcast.
Yeah, exactly. And so I guess the question for you guys is, how different is all of this from, let's use tech because we know it fairly well, all the tech stocks that dropped 91%. You could make an argument that, even though they're real assets and real companies, they were just playing a different game of a bullshit, essentially pyramid scheme, but that one was VC-backed companies, and it was about getting a seed round, then Series A, Series B, and each round, if you're the lead investor, you got to be in there to signal to the market, and then you just want to keep growing, and eventually you dump on retail when you go public, right? And that's a very cynical take, right? Obviously, there's plenty of
shaking his head. Fiat fan is distraught with
I'm
that
asking the
description.
question. I'm not saying that's the craze. I'm not saying that's really what it is. I'm
It is,
saying the
Bilal.
most cynical
It
version of this. And there's definitely some examples of that. But go on, Fan. What do you reckon?
No. You guys go ahead. I got nothing to add.
Go on, Jack. Go on.
I was just going to say, Bilal, like, I think you are 95% on the nose in many cases of just the overarching idea of like, those with capital can extend the runway of something that is not economically viable until it becomes economically viable.
Exactly.
Through some instrument that they have access to. Uber is a good example, right? It's like, without a massive disparity of resources being allocated to make this thing an amazing story, it never reaches the New York Stock Exchange.
Has been invested into Uber, and it still might never be a profitable business, to Jack's point, right? There's a world where it might never be a real business.
Yeah.
That's wild, yeah.
But it's good. Like, it is I use it. It's an amazing thing.
It changed
It's
the
an incredible
behavior.
thing.
It totally changed the transportation behavior.
And that was the point. Jack, that was kind of my point. Is like, we all know it's a better product than calling up a random taxi like we have to do in a lot of parts of the world, right? Or even flagging down a yellow cab in New York. I much prefer Uber. But if essentially we just got, as consumers and investors, essentially that was a bit of a pyramid scheme in itself as well, right? Like, maybe that's not the right phrase. Maybe I'm being too harsh in the language, but in terms of the reason we all got $7 Ubers for many years, which is crazy.
It
shouldn't be $7, right?
Yeah.
It was VC subsidized. The reason I got about $200 worth of DoorDash credit in my account right now is because I'm an acquisition cost, and they want to keep pumping their numbers as well.
It's narrative subsidized, Bilal. Narrative
there you
subsidized.
go. Exactly. But and just to clarify, obviously I'm semi-joking, and I'm embellishing it, but like there is, and I think the word pyramid, I'm a little averse to using that normally, but I'm using a harsh word to describe this.
High growth company, Bilal, not pyramid scheme. Thank you.
No, but and I guess it's more of a philosophical question. Like, if the whole system works like this, and we reward and put people on a pedestal for playing the system. Like, here's another example. Like, I'm a fan of Elon Musk, what he's done in the business world, but the people on the other side of his, who don't like him, they say, oh, he basically just, made the most of government contracts or whatever, subsidies, which I think is a very smart thing to do, because if they're available, someone's got to make the most of those. But for someone else, they're like, well, that he was just playing that financial instrument game in a different way. which is a fair point in itself. So, obviously, he also created, to clarify, several companies that are outstanding. So that's a separate point. But in terms of, if you're listening, Elon, exactly, yes. But no, all jokes aside, that is that you have to decouple. I'm trying to decouple what I said before. The company I like, but what is the valuation in the way I said before? But here, Tesla, love Tesla, but valuation, is it? A lot of people will say it's completely overvalued as well, based on trying to get defensive. Yeah,
it was all a meme. It was all a meme.
You know what? I'm laughing. I'm laughing so hard at Bilal with the $7 Uber.
Man, sometimes I'm in
$7 Uber to Google HQ, right? Bilal?
Oh my God. Wait, the worst one, honestly, to me, I was in LA a few years ago and I remember taking like a 35-minute ride and it being like $12. And I was like, this guy, I felt so, I had to give the guy extra tip and I'm like, I feel terrible that this guy drove that long and it cost $12. Like, didn't make any sense. And now it went the other way. Everything's expensive again, but just, it's a weird thing that we've kind of rewarded that as well.
We mentioned it, but I can't keep my eyes off this timeline. Sorry, I saw our boy Rick.
Do it.
Yeah, Rick our boy Rick Byrne was here a couple months ago, and he's just saying, he's like, I just never trusted this guy. He said it. He's like,
what did it? Could you pull up the tweet? Because I want to talk about it actually.
This one's a bit. This is from mid October. He just retweeted it, but I think his. I think from what Rick has said in the past when we've heard of him, one tweet he did was really funny was like, and this goes to Jack's point about these guys don't actually represent crypto, like the actual ethos of crypto. It goes back to SBF saying, I trade orange futures if I could. And what Rick had said is he's similar to Zuck in the sense of Zuck doesn't care about product, right? He doesn't actually, does he actually?
According to who?
No, like when you think about Zuck in the sense of like, he's like Steve Jobs versus Zuck or Bill Gates versus Steve Jobs. Steve Jobs was a pure product guy. That's the reality. He cared about the product. Bill Gates was a cutthroat businessman. Obviously a great technical person, but his real skill was he was a savage business person, right? Not to say Steve Jobs wasn't good at business, obviously was, but if you go through Steve Jobs' history, he's a product guy. And like, again, SBF didn't care about the product of crypto. He cared that it was a vehicle to make a shit ton of money, right? I think that is what Rick was alluding to. And it turns out to have been born correctly.
Well, and actually, another point, we're on the timeline. Rick just retweeted this. I think this is a good point. Something that Jack mentioned earlier with Uniswap. This is Alex Masmej on Twitter. He said, every time there's a liquidity problem in crypto, it is centralized companies, not DeFi. Every time there's social media moderation problem with centralized companies and not Web3 social. The second part, we don't need to go into that part. I think also no one's using Web3 social, so like whatever. So no, let's be honest. I mean, who's using Web3 social? Like,
there's no content to moderate.
Exactly. But the point, I think that is a good point, and it kind of brings us back to like something we've talked about forever, and a famous phrase in crypto is "not your keys, not your crypto." I mean, we've all learned this the hard way in different times. I learned it in a very hard way, even in the last year. Like, and I'm pretty good with most. I've had like cold storage forever, but as we all know, like sometimes you get sucked in and things are going well, and you can irk out a little bit more yield, and you're like, okay, this is easier. Let me use this, and that is the thing. When things are going well, you're fine, and when you're not,
let me post this. You guys are gonna shit yourself. Can you see that? Tweets. There's an article titled "A 30-year-old crypto billionaire wants to give his fortune," and then FinTwit just writes "Mission accomplished."
Oh my God, hilarious. Anyway, and then sorry, Trung. The last thing I was going to say to Rick's point about he also shared SBF has never acted in good faith because he tried to have a civil debate with him. In September 2020 and got blocked. He didn't like that, and it's something we talked about with Kwon as well. And I'm not just saying this in hindsight, but like I have had this thing with when people are kind of like just mean unnecessarily to people on the internet. Like a lot of the time, it seems to be coming to it catches up with them. Especially I'm talking about like CEOs and founders. I think Kwon was on another level. I think SBF was kind of funny at times, but there's definitely an element of that as well. And I think that's something, in the same way you had that rule around when CEOs don't like to tweet, you're kind of worried about, can they be trusted sort of thing. I find it a little bit here as well. Like when people are just being like massive babies essentially on the internet, I don't think it ends up well most of the time. But anyway, anything else before we wrap that one up, boys? This was really, really good.
I'm looking forward to re-listening to this because of how distracted we're looking at these timelines are. I think this will be very good. But no, I got nothing else to add, man. I think we covered a lot of bases there. What do you guys think?
Great job on that.
I was just gonna say, guys, the three of us have more sustainable businesses in FTX. So congratulations.
We won. That's true.
Not wrong, to be honest, right?
Well, this is the closing thought was like the whole idea of starting a profitable business is something that is for plebs, basically.
What, starting a profitable business, you said?
Yeah, I'm saying like the game that some people are playing is just narrative, leverage, relationships. Obviously, there's amazing, talented, incredible people building technologies that require a shitload of belief and capital to build. But that game is so different than the economics of how most people are brought up and how most people think about how to make money, how to make it in the world. And I don't know where that narrative goes in years to come. I don't imagine venture or any of these concepts are going anywhere whatsoever. But in a moment like this in the market, the celebration of businesses that can operate without that amount of risk is just not something that we're generally interested in, right? As people. Yeah. Bring back the Sriracha stories.
Dude, we got to do a full episode on that. Well, Jack, this will, to just cement your point, let's leave it with this at was it 2:17 p.m. Eastern for the listeners. FTX, remember when we said earlier that FTT, the token, the Alameda CEO is like, we'll buy it all for $22. It is now at $6. Dropped 75% today. The market cap for FTT is below $1 billion now. So
down 69% if you want to know a moment right there.
Number.
Sounds a little familiar.
We don't know what's going to happen.
72%. This is a Big Short right now.
Yeah, boys. I was gonna say, is this the Big Short? The last scene when he's on the phone and everyone's phones are going off. The Blackberries. Jesus Christ. Boys. Well, look, by tomorrow morning, by the time this comes out, if you're listening to this, it'll be out Wednesday morning. We record it Tuesday afternoon. Yeah, it could all be done, man. It could all be zero. It looks like it's going zero. It makes sense. I mean, it was worth. There's no reason it should be worth anything.
Plugging so in summary, CZ is going to plug the hole if they do the DD, make the customers whole. If not, then apologies because that means everything just went to zero.
Yeah, then we got bigger problems, man.
Yeah.
All right, boys, that was fun, man. Great breakdown. Thanks for chatting that through, boys. That was kind of a historic day. I'm glad we got to do it live straight after.
Yeah, that was wild,
day.
Guys.
And thanks for rocking with us every week. We'll be here again next week. Let us know what you think of this in the comments. Hit a like and subscribe on YouTube and your favorite podcast app, and we'll see you next week.
By the way, Bilal, we got to put that at the top of the episode. Like and subscribe. I've been watching podcasts. They start doing it at the start.
That's true. That's true. All right, boys. We'll see you next time. Bye-bye.
Thanks, everyone. Bye.